I have here today Jackie Lozada, the program manager of Will County, and Mario Cantella of Fairway Independent Mortgage to assist me in speaking to you about some of the ways that you can get down payment assistance to help you get yourself into a home. So, as we all know, buying a house is an exciting endeavor. It's a life-changing, purchase that can also feel very overwhelming, especially when you consider it's likely one of the most expensive purchases that you'll ever make. Today, we're going to dive more into a local program that can help you with down payment assistance. So I want you guys to go ahead and introduce yourself. Mario, go ahead and talk about who you are and who you're with.
Hello, I'm Mario Cantella, as Tiana said. I'm a senior loan officer at Fairway Independent Mortgage. I'm located at the Elmhurst branch. I've been a loan officer since 1998, so a lot of years. And to be honest with you, this program that we're going to be talking about is probably the only program that knocked me off my chair when I first heard about it. It is simply amazing. And I am so thrilled to be here with you guys to let you know about it. And hopefully you guys will gain much knowledge from it.
All right. Thanks, Mario. Jackie, go ahead and introduce yourself.
Hi, I'm Jaqueline Lozada, Jackie, with Will County. I do work in the community development department, and we have developed this down payment assistance program to increase home ownership within Will County.
Beautiful, beautiful. Yeah, when Mario first brought this to me, he called me, and we talk often. And sometimes it's like 10 times a day, depending on what's going on with our deals. But when he calls me, he goes, "Hey, I got this program. I don't know all the details about it, but it sounds great, but it almost sounds too good to be true. But let me get some more information for you. I'll call you right back, or I'll shoot you an email." And I go, "Okay." So I know he was really excited about it. And then once we kind of, doubled back and spoke with you, Jackie, I was like, "Oh, okay. I have to tell some people about this." It's almost like, is good, if not better, than student loan forgiveness, which is like the hot topic right now. So not only will you get, some additional funds, you can start building wealth and, creating a legacy, for your family, and getting into that buying a home is not, it's not impossible, right? There's a lot of other ways that you can be helped and assisted. So Mario, really briefly, what are some of the things that people don't realize that are costs when it comes to buying a home?
Well, there's, the obvious, the lender, the title company, your attorney. But people forget we also have to put in your escrow. People, for some reason, don't think about taxes, insurance, and we're setting that up for them for future taxes and insurance bills. So, and those, depending on, every property is different, but that could be several $1,000s sometimes. And that's an obvious, hit. But it's your standard cost. Also, as well as with this particular program. And Jackie, please double check on my numbers. There is a fee for this program. You're getting $25,000 down payment assistance. The cost is 1%, which is $2,500. Is that correct? They have to put in $2,500 of their own money. Is that correct?
That's correct. So although there is no cost associated with being approved for this program, we do ask that each home buyer take a responsibility of their own funds into the property of $2,500. That cost could be towards their appraisal. It could be towards the application fees, whatever funds are coming out of their own pocket towards. It could even be, home buyer counseling classes if they've, paid for a course. Any costs that they have made that are associated to the purchase of this property is considered part of that responsibility.
Got it. So just to recap some of the costs that Mario mentioned that are just involved overall with buying a house, you have your earnest money deposit, which a lot of people don't realize that some of the upfront money that you may have to put in just to say you have skin in the game when you put in a contract and a seller accepts your offer. they want a deposit. So that's your first, and then you have your inspection costs, so that comes out of your own pocket. And a lot of people just think about their down payment, so they think about the down payment only, and then they have closing costs, which
Right.
I'm very surprised at how many people, and I try to talk to them and make sure they talk to a lender that will go over all of this information, but they forget about the closing costs, which include those fees that Mario was talking about for escrow, meaning the prepayment into the taxes or the insurance or things like that that you need to have in order to be ready for closing. So it can be overwhelming. There's probably a lot of terms that we're using and titles that we're using that you won't ever have to deal with again until you get ready to buy or sell your home. But today I'm going to let Jackie speak on the program that she is promoting right now in Will County and tell us all about how we can get people involved with this. So first of all, Jackie, what is the program?
So the program is down payment assistance. And although it is labeled as down payment assistance, this program is designed to cover not just the down payment. As you briefly mentioned, some people will put down earnest money in order to, get that contract in the amount of whatever the funds may be for their earnest money. This program is designed not only to cover what portion of the down payment is still needed, it's designed to cover the closing costs in the amount of, whatever range they may be. We've seen closing costs vary between $9,000 to $16,000 to $20,000 at times, depending on the contract. And it is also designed to be gap purchase funding.
Okay.
So, to briefly touch on that, because some people may or may not be familiar with the term. If somebody is approved for $200,000 and they want to place a contract on a property that is $215,000, we do cover that gap purchase price as well.
That's awesome.
Yes. All in all, the total amount or cap of the assistance is $25,000. But it could go in any variety of ways to get those costs covered and to make that purchase feasible and hopefully more affordable for them in the end.
That's awesome. So just to expand everyone's mind on it a little bit, we try to categorize what we're putting our money towards. It's not just escrow or down payment or earnest money or gap. It's available to fill in wherever it's needed. So if I fall short for, my closing costs or my down payment or wherever the funds seem to be, not quite there, as long as I bring my, obviously we're going to go through the requirements for the program. As long as I meet the requirements, I'm bringing in my 2,500. I have this assistance available to fill in all those spaces. Correct. Is that correct? Okay.
Yes.
Okay,
and
great.
Also one thing that people also don't typically know, this could also be towards, buying down a better rate. People don't realize that, you can purchase more points to buy a better interest rate. And this program also does cover that as well.
Right. Yeah. Mario, for buying down points, are you seeing that a lot? I'm just...
Yeah, people are very interested in doing so. I have several of my current clients who we are buying down points, about an average of about a quarter of a point. And it does help. One, we had to because the debt ratio was too high, but it just so happens that I have a handful of clients that are still doing the buy down, paying down points and so forth. And they don't care about, they do care, but they're not too concerned about paying the points to get a better,
right.
It's basically telling them you're marrying the house, not the interest rate,
right.
And so forth. So that's the concept that I'm teaching my clients, and we can always refinance later. We can always do that. If rates come down, I will call you to say, hey, you could save an extra $200 a month, and so forth. But for the most part, my clients are still, and a couple of my coworkers are seeing the same thing. People are very interested in buying down their rate.
And the benefit of buying down the rates, before we move forward with how people can qualify for this program, the benefit for buying down the rates is what?
Well, they can not only get a better monthly payment,
Mhm.
but they can afford more house. So the DTI goes lower, and they can afford, a bigger, better house, better location, whatever the case is.
Right.
Just to get their rates, instead of in the mid fives, we can get them into low fives or high fours. And now we're talking a different neighborhood, a different school district, whatever the case is. And yeah, it's much more beneficial not only towards themselves but their family.
Right. So having this extra or additional funding available through this program that Jackie is explaining to us, it can help so many different things. It
It's a
can
game
help
changer.
you. Yeah, it is a game changer. It's a game changer with where you may, where you may qualify. The difference between $10,000 on your
Right.
pre-approval can
Right.
move you into a completely different area or sized home. Being able to buy down points can change your mortgage payment so that you're way more comfortable with that monthly
Right.
mortgage payment until that get an opportunity to refinance. And then, of course, this is money that you don't necessarily have to sit and wait to try to gather, which in these days and times with inflation going up is a little bit harder to keep your extra pennies.
What makes this program so amazing is that the flexibility, as Jackie was saying, you could take a portion of your down payment assistance and put it towards purchasing down the rate, or put it towards closing cost. It's very flexible on where your weak point is. That's where we'll put the money at, so
Mhm.
we can get your dream home and be happy for a very long time.
Right, right.
Absolutely. A lot of people don't even realize that, whatever funds are left over after your closing costs or after your down payment or after, those funds could go towards paying down that first mortgage and can mean hundreds of months difference out of your
Mhm.
pocket when it comes to paying your mortgage amount. So, whatever roadblocks that we see, we have tried to design this program to navigate around those roadblocks before they even occur for home ownership.
Got it. Got it. So let's move on to what is available with this program, because we spoke briefly on just kind of how helpful it would be. So what exactly is it? We threw out some numbers, we said something about 20,000 or 25,000. So what exactly is the program? And then we'll move on to the requirements.
Absolutely. So the program maximum cap is 25,000. We
Okay.
do attempt to get every single applicant $25,000. We have yet to meet a situation where we haven't been able to get them the maximum amount of assistance. But as we all know, that it may be possible. When we first receive an application and look at it and start plugging in someone's income information and prospective property tax or mortgage insurance, or all, we do have a subsidy calculator that we plug all of this into. And for the most part, again, we are able to qualify everyone for the maximum amount of assistance.
Mhm.
It's very rare where we meet an occasion that we wouldn't be able to.
Okay. Okay, perfect. So let's say I'm interested. I am someone who saw this video or heard about the program, and they call and they go, hey, how do I get started? Jaqueline, how do I get started? Or Mario, how do I get started? What's the first step?
I could take over, Jackie, on this part.
Sure.
The first step is to call me, and that's the first
And
thing.
you only.
Always call me first. I will, once we go over, the program, and we take a full application, we review your credit, all that good stuff to make sure that you're approved. Okay. This program you need to be approved in order to get this unbelievable program. So once we get you approved, then then I provide a pre-approval letter to Tiana, your realtor, and her job as well is to find you your dream home. Okay. Once we have a contract, that's when the fun begins. We will find out, hopefully we get you the full $25,000 or very close to that. And the process is fairly similar to a regular, conventional FHA loan, pay stubs, bank statements, tax returns, all the necessary documents that we're going to need to make sure that what you told us on the application is true. Okay. So once we have that to the side, then my team here at Fairway will communicate with Jackie's team at Will County to come up, the paperwork and all that good stuff to get things going. So at the closing, we all merge together, and for you to get what we call a soft $25,000 lien on your property. Am I correct on that, Jackie?
Yes, correct. So I would like to mention, if you are working, if you are a prospective buyer working with Tiana and Mario, and, you would like to know just if you qualify and how much you qualify for, we can pre-qualify somebody just based on their lender pre-approval, as long as they've already been approved through you, and we have, their loan type and amount set. As long as we have a prospective area, we're able to pretty much at that point issue a pre-qualification letter, which states, you would qualify up to the maximum amount of assistance. So based on, just initial information, we are able to get you an idea of, the maximum assistance you would qualify for. So that way, as you are searching for a home, the range that you could stay within, about that your closing costs are all going to be covered, and you could factor that into your search.
Right. Okay, that's great. Thanks, Mario. Thanks, Jackie. So we got the maximum cap of 25,000 for this assistance. We have the lender pre-approval has to come first. So is there any minimum requirements that people should have in their head for the lender's pre-approval, Mario?
As far as what they're qualified for, or?
Well, as far as like credit requirements or income requirements for this program in particular.
Right. This particular program does not require any credit.
Okay. So it's your pre-approval.
So it's just our pre-approval.
Okay.
Fairway does go down to a 580 credit score. It doesn't mean that you're going to get approved, but we will take a look at your file with a low credit score of 580. Okay. So obviously, once we receive all your documents, we review the whole, loan, and to make sure that not only you do qualify, but to make sure that you're comfortable with your payments, you're comfortable with the loan program. We definitely don't want, I don't want you, any home buyer to be eating rice and beans for the rest of their life. You know what I mean? I want them to enjoy life, go out to dinner with their spouse or their family, go to a movie, whatever the case is. So we want them to feel, purchase a great home, but also live comfortably and happily. And that's the bottom line. So, but as far as credit requirements, this particular program does not have a credit requirement as long as the lender provides a pre-approval. Will County will go full speed ahead with that. Correct.
Okay, great. Thanks for recapping that. So with the pre-approval, now I am pre-approved. I'm excited about this program that Jackie is speaking on. Where am I looking for a house? Am I restricted? Like, what areas should I be searching for my home?
Do you want to take Jackie, or do you want me to tell you?
Yes. Actually, if you don't mind, I'm happy to answer this question and possibly a few others as well. If you don't mind, I'll share a screen. This is part of a slideshow presentation that we often give, just to go over some eligibility factors and what we look for on our end. So I will go ahead and share this presentation here. We do let people know that there are eligible property types, which are single family homes, condominiums, townhomes, and manufactured homes on fixed foundations only. I know some manufactured homes, maybe not on fixed foundations. Unfortunately, we do want to make sure that the property remains in Will County. As long as it is on a fixed foundation, that would be an eligible property. Ineligible properties for this program are homes that are tenant occupied. We would hate to commit to this down payment assistance to get, this prospective home buyer into this home, and then to have tenant occupancy issues after the fact.
Okay.
As far as where this home can be purchased, this property could be required anywhere within Will County. And that does include areas of City of Joliet that are Kendall County as well. It also goes to show that areas of Bolingbrook are DuPage County. We do cover those areas. As long as Will County is either primary or secondary county on the actual property itself, this program would cover that home.
Okay, that's great. This is a very nice list of cities.
Yes, absolutely. And I mean, obviously there's more than what's listed here, but as long as the county or sub-county is listed as Will, we are happy to, make this purchase happen for you. Just a quick reminder that, we are funded by HUD. And because it is funded by HUD, it is designed to provide decent, affordable housing to somebody that is what's considered 80% or lower of the area median income amount. So there are some eligibility requirements as far as, we don't want somebody that makes $500,000 to make use of this program when we could fund others that are in a more, that quite honestly need it more than others.
Right.
So the funding is subject to these requirements and guidelines. The salary or the income level that people are not able to exceed are listed here. And this is for, total person household. If you're a single individual living on your own, you would qualify as a one-person household. If you are a single parent and have 2-3 children, that would then be a 2 or 3-person household. For those households that have 2 parents, obviously, no matter how many people are within your household, there is a salary requirement or an income requirement or eligibility there for you.
Yeah.
Few questions that we get asked very often. The non-occupant co-borrowers are allowed under this program. If you need somebody just to qualify to purchase the home, we are able to utilize this program still and not use that co-borrower's income towards your household.
So just let's stop right there for a second. So if Mario needs a co-borrower for me because I couldn't qualify by myself in order to get pre-approved by the lender, when we go over to your program, that co-borrower's income is not going to be utilized to cap me out of this program, is what you're saying?
That's correct.
That's awesome. Okay,
yes.
Thank you.
Very awesome. As far as maximum property value limits, I think these are important because, again, we want to make sure to make housing affordable. As much as we would love to put everybody in, 6-bedroom, 7-bedroom mansions, it's just not feasible.
Oh, man.
So I know, unfortunately. So we do have purchase price limits within Will County. And these limits are set to increase in June of next year. They are raised every year annually in June. So as of right now, this year for 2022, for existing homes, the purchase price limit is $271,000, and for new construction homes, it's $286,000.
Okay, perfect.
Yes, I believe that's pretty much all of the eligibility factors that we deal with.
Okay, wonderful. All right, Mario, do you have any questions on that?
No, it's
To add to that?
it's great. Hopefully there's a lot of properties in that price range. I know it's challenging out there, but hopefully there's quite a few properties that people can choose from and go full speed ahead with this great program.
Yeah, it's getting much better. So I am excited about that. And as long as the weather stays nice and buyers are coming, kind of back out after they've been in hiding for a little while,
Yeah.
we can get back out there before it starts to, I don't even want to say that S word. The white stuff that comes out of the sky. Um, so you mentioned all of the eligibility requirements. Mario spoke about the lending, process, and obviously it's my job to go out there and connect with these buyers and make sure that they understand the information and get them into the home. So, am I on a time frame here in which I need to get out there and hustle and have my buyers take advantage of this program?
So this program, obviously historically the rates are still at a really great area. It may not be where it was last year, but historically they are still at a low point, where it's still an amazing time to buy. Inventory is increasing, so we are seeing more sellers get back into the market where it's not as volatile as it was before. We are seeing more sellers putting their homes and now ready to go ahead and sell their properties. As far as this specific program, we just got funded for an extra $500,000. We just got funded for an additional 500,000 on top of the original 437 we were awarded. So right now, it's an amazing time to utilize this. Funding is first come, first served. So whoever is getting out there and getting those purchase contracts and, closing on these properties, obviously, they are the first ones to, be awarded this grant. And although we have had 7 successful closings already, we do have a few more in the pipeline, and I would love to continue adding to that.
Awesome. Okay, perfect. Well, that's motivation for me and Mario to get out there and do what we're supposed to be doing.
Exactly.
Does anyone else have anything to add? Otherwise, I think that we can wrap up. No?
I don't. I just want to add that, Will County, it is, again, our goal to truly increase home ownership within Will County as much as possible in the next few years. Although we are working with, the initial funding amounts that we are utilizing right now, I would like to say that we have already put in a request to add more to this grant next year. But, that's going to be based on how it's utilized. If we see this making enough of a difference in people's lives and, being utilized to its maximum potential, there is potential for this to continue getting funded going forward. For people to know is that, it can be layered with other programs. So as amazing as this program is, there's still IDA as well.
Right. So you guys will be fine with being third position, like IDA will be second. And wow.
We'll take third
so
position.
People can get up to 25 plus, let's say 6,000 from IDA. That's $31,000.
Absolutely. As great and amazing as this program is, it can still be layered with other down payment assistance. So, there's still IDA and there's still other agencies that will fund as well. We are happy to take, second position, third position, fourth position, whatever position we have to make this happen. We are willing to take it. We just closed 2 weeks ago on a home for a woman that walked into this home with $36,000 of equity. She had $25,000 from us. She had $6,000 from IDA, and I believe she had another $7,000 from the Greater Bank of Chicago, if I'm not mistaken. So, this woman on a subsidized income was able to purchase her home and walk in with $36,000 of built equity already.
Wow.
Jesus.
Yes. Amazing.
If I could rewind time and be like, how come I didn't know about these programs? But there's so many people that don't know, there's so many realtors. So I'm glad that we found out about this.